This video is not saying that the market is an imminent collapse of a bubble. The reality of it is, for us as traders, it really doesn't matter. We have to play the market each and every day, each and every week, regardless of the stage that it's in. But there is a psychology to the market, and there is a psychology behind bubbles. And there is the psychology driving all markets, whether they be in a bubble or not. And that is the psychology behind greed and fear. So, in a generic sense, when a market begins to originate, it's in what we call the stealth phase. This is where the takeoff phase is. And then it gradually increases. So, a little bit of an awareness. We get the first sell off, what turns out to be a bear trap. Comes down, shakes out some of the nervous sellers concerned with the old sell-off of old, right? This would have been March of '09, for instance. This turns out to be a bear trap. As we take out this high, bears begin to cover, and away the market goes. This is at this point where the market begins to get media attention, the mania phase, the enthusiasm, Apple, Amazon, the greed phase. Okay, this is the greed phase. Roku, the delusional phase, Bitcoin, Litecoin. So we go up, the new paradigm phrase. It's different this time. Something is entirely new. The market will never go down. Truly the mania phase, which is and this up here is the blow off phase. Market turns down. It's just another dip to be bought. The bulls deny it. Everybody who bought the market, whether they bought it back here, or even here, is a genius. Everybody. And if it's an all-time high in the history of the country, everybody who ever bought a stock or an index in the history of the country, including the people who just bought yesterday, they're all geniuses. So when the market turns down, it only stands to reason that the vast majority will be in denial. Could it be possible that I, as smart as I am, that I could have bought the very top? No way. Market dips. What do we know? Buy the dip. Buy the dip. They will buy that first dip. We reverse up, and everyone is lulled back into sleep, a return to normal. New buyers will come in. Any of the bears that weren't exhausted here will come out. And then quickly, the market will roll over. The market will roll out, take out the most recent bulls, and proceed to fall much, much quicker than it rose. Why is that? Fear. Fear is a much greater motivator than greed. This is all greed. That have you believe up here that it's FOMO, fear of missing out. There might be some of that, but it's not a huge motivator. This is the huge motivator. So this is where we do that melt up phase. This is where the elevator breaks loose from its moorings and totally collapses. This is the capitulation phase. I can't believe it. I can't believe I was that stupid to let Wall Street suck me in again. Damn it, Martha. They did it to us again, just like they did in '08, just like they did in .com. If only I had sold the market. Instead, I bought the market. I bought into the delusions. How stupid. It's in this phase that nobody will even admit that they bought Amazon at 1200 or Priceline at 2000 or Boeing at 300. None of the geniuses will be around. They will be gone. We'll come down, challenge the old lows to where there's just total despair. No one will want to watch CNBC. Virtually no one wants to watch it now. No one will want to talk about the market, and no one will even want to talk about Bitcoin. It will all be a distant memory. And then at some point, when they've all despaired, they've all capitulated, they have screwed us again, the market will bottom out and be sold again to the new suckers. That is the psychology. Let's take an objective, long-term view of the SPX on a monthly basis, and you tell me where we are. Now here we are. This is a monthly chart of the SPX on a monthly basis. This is 2007. This is 2009. This was the crash that wiped everybody out. This was the dot-com crash. Then up from the ashes, up to the top, and down we come. It was down in here when the SPX was trading at 666, virtually cut into thirds. It had been up here at almost 1500. Nobody wanted anything to do. Remember the market, the economy, crisis, crisis, crisis. But the buying started. It was a pullback. We're going to crash again. Supported. It turned out to be a bear trap. Away we go. Pull back again. There was even a flash crash in there. Bear trap. Now, so this was the smart money. This is the awareness stage. This is the mania stage. Once again, turn down, bear trap, and then a rocket. Look at this. Rocket, straight up. This is the greed phase. Okay, this is it's a whole new ball game. It's different this time. This is Bitcoin, Litecoin. All may not be in the index, but it speaks to the rampant speculation. So when this does turn down, in all likelihood, you would expect there to be, of course, denial. Of course. When we do turn down, and I'm not saying it's going to be tomorrow or even this month. We'd have to go into much more analysis to see that. But when it does, they will be in denial. Then some bears will come out, some new buyers will come in, and up will come. We won't make a new high, but we'll begin to roll, and then we'll collapse. That's what it'll look like. In some place, maybe here, 1900, most likely down here around 1600 or so, there'll be a test. And if this test doesn't hold, yes, we'll go back to the bottom. Now, for those folks that like to count Elliott waves, this is on a monthly basis. Count with me. 1, 2, 3, 4. Reality of it is we've had more, so let's just go. We'll make it even more conservative because we want a nice big fat 5 count. 1, 2, 3, 4, 5. Thereabouts. Easy to say that we're either on a 5 or a 6, but we're on an extended wave count on a monthly basis, just so that you know where you are. Let's do a little Fibonacci work. For those of you not familiar with Fibonacci, there is this thought that everything in the world is based on Fibonacci numbers. So we grab the low of March of '09. We bring up our Fibonacci extension from the A to what we call the B point. This is the last discernible pullback in the market on a monthly basis. And then we stop it here. So this is the A, this is the B, this is the C. Currently, the 1.61 extension is 2674. We are at 2743. If we go much higher, entirely possible that we could have 100% extension. We could be going to 3,216.12. And we could even go further. So you want to be looking at on a monthly basis for the pivot. You want to see a higher high and then a lower low. At least we've made a turn. We've made no such turn. Okay, so if this confirms in January, chances are we're going up higher. And if we can't turn up in here, we'll go even higher still. If we turn here, where might we come back? Realistically, at minimum into this area, which will feel like a crash. I'm Bag of Don at StockMarketCaddy.com. Again, we're not predicting the crash. We let our algorithms tell us how to trade. I'm just pointing out the psychology of a bubble market in what the SPX cash currently looks like. You draw your own conclusions. If this resonates for you, feel free to join our little private club at StockMarketCaddy.com.